Bitcoin is the only true global free market that we have in the world, okay? The price of Bitcoin tells the world what the global community thinks about fiat liquidity. Bitcoin does not trade on Donald Trump announcements, Elon Musk tweets, Michael Saylor convertible bonds. It does not. One of the unique and rare utilities that Bitcoin has is a global expression of what the world thinks about fiat liquidity, meaning it's not a hedge, it's a solution. It's not a hedge, it's a solution. It's a put option on the existing system. It's long volatility. It's monetizing chaos. It's the best expression of currency debasement. Bitcoin, its utility that Bitcoin's going to be first and going to be the most violent because it's screaming at the world what's actually going on.
One of Jack Mallers' strongest points is that Bitcoin is a revolutionary tool for financial independence rather than just a new kind of money. Bitcoin runs on a network that is permissionless and international, in contrast to existing financial systems that are hampered by middlemen, fees, and political agendas. According to Mallers, Bitcoin is the most authentic manifestation of free market principles in the digital era, since it is neither governed by Wall Street or central banks. He contends that Bitcoin offers a means of completely avoiding the dysfunctional banking system in addition to serving as a hedge against inflation. Since Bitcoin enables anybody, wherever, to hold and transfer value without depending on banks or governments, Mallers sees it as a fundamental shift in power from institutions to individuals. This is a movement toward monetary sovereignty that goes beyond technology. If you're intrigued by bold predictions and deep financial insights, make sure to like this video, subscribe to the channel, and turn on notifications for more engaging content. Thank you for your support and enjoy the video.
Listen, here's my rant on the Bitcoin dump. Listen. We got our strategic Bitcoin reserve, okay? It is a Bitcoin-only reserve. The crypto coin funds, they're not buying any altcoins. They're not thinking strategically about altcoins. In fact, the only strategic notion about the crypto stockpile is that they can be sold to buy more Bitcoin. The government is not going to be selling any Bitcoin. It's going to think about strategically buying Bitcoin. However, for those of you that think that Bitcoin is driven by announcements, you have been fooled, okay? This market is far too big and far too sophisticated to move on announcements like what we saw with the strategic Bitcoin reserve. This was no new information. This was no new purchasing of Bitcoins. This market, this is a global commodity market. If you think it's supposed to move on announcements like that, you have been fooled. Guys, Bitcoin is the only true global free market left in existence, okay? The price of Bitcoin tells the world in real time what the global community thinks about the current state of fiat liquidity. Super important. Bitcoin's price is not a reflection of what the White House thinks. Bitcoin's price is not a reflection of what Elon Musk thinks. Bitcoin's price is not a reflection of what Michael Saylor thinks. Bitcoin is the only global free market we have left, and it is the reflection and the expression of what the world thinks of fiat liquidity. Meaning this, Bitcoin is not a hedge. Bitcoin is a solution, okay? I often hear people, Bitcoin's not acting like the hedge it's supposed to be. It's not acting like the hedge that gold is. Bitcoin's not a hedge. Bitcoin is a solution, meaning Bitcoin is a put option on the existing system. Bitcoin is long volatility. Bitcoin is monetizing chaos. Bitcoin is the best expression of currency debasement, okay? Meaning when fiat liquidity dries up, Bitcoin leads, and Bitcoin expresses that first, and Bitcoin goes down. When Bitcoin liquidity loosens up, and money printers go burr, Bitcoin leads. Bitcoin's the best performing asset in human history. Bitcoin goes up the most. Okay? So why is all of this relevant? Bitcoin's not trading off announcements from the White House. It's not trading off announcements from Saylor. It's not trading off Elon Musk's interviews on Fox. What's it trading off? Okay. Donald Trump wants cheap money. Another way to say that, the politically correct way to say that, is Donald Trump wants lower interest rates. Okay? But we know, and we've been saying on this show over and over and over again, I tweeted it out a month ago, the Federal Reserve is openly stated they will not listen to Donald Trump. The Fed is openly saying they will not support his monetary policy, this administration's economic plan. So, what does Trump and Scott Bessent do? They are letting markets collapse. They are drying the markets up of liquidity. They are letting Elon Musk run rampant inside Washington, D.C. and cut all spending, fire everybody. Guys, whether it's spent through the government or not, dollars that are issued into the world find their way into Whole Foods, find their way into NFL merchandise, find their way into the real estate markets where you live. If Elon Musk is cutting trillions and trillions of dollars of fraudulent spending and firing lots of jobs, that crashes the economy. The Treasury and the US government are pulling back liquidity and demanding from the Fed and from the long end, from the 10-year, cheaper money. Trump says, I want to reshore everything in America. That requires cheaper money. Another thing, you guys, just to put this in perspective, these guys need to reprice $10 trillion of bonds this year. They need to reprice $2 trillion in April alone. April is their biggest month. $2 trillion in April, $10 trillion this year.
Comparing Bitcoin to more established marketplaces highlights its significance even more. Bitcoin functions autonomously and reflects current financial conditions, unlike equities and bonds are subject to Federal Reserve decisions. Bitcoin's price often declines when the amount of money in circulation decreases. However, Bitcoin rises first and quickly as liquidity improves. Jack Mallers sums it up with a bold claim: show me the cheap dollars, and I'll show you a $500,000 Bitcoin. His point is simple: when the Federal Reserve eventually eases monetary policy, Bitcoin will lead the charge, reacting faster and more dramatically than any other asset. Please take a moment to like this video, subscribe to the channel, and enable post notifications for future Bitcoin, macroeconomic, and digital asset content before we go any further. Now, let's get into his powerful predictions.
So markets hate uncertainty, and I've been saying it on this podcast over and over and over and over again. The near term is extremely uncertain. We don't know how tariffs are going to play out. We don't know how the government layoffs are impacting the economy. The economic data that came out on Friday, we still don't know. That economic data is not factored in all of the firing that's going on in DC. So, government, Trump, Bessent, they are drying up liquidity because they want the Fed to cut rates. They need cheaper. Guys, if you had to refinance $10 trillion, do you want rates at 4.5% or do you want them lower? They need cheaper dollars. They need cheaper dollars. And I've been saying it on this podcast over and over and over again. But the thing that shocks me is that people think Bitcoin trades off of announcements in Washington, D.C. Of course it doesn't. It trades off global liquidity. It trades off fiat liquidity. And the U.S. government, Bessent, is not playing around. Let me read you guys a few quotes that I pulled up from Bessent in preparation for this episode. Quote, "The market and the economy have just become hooked, and we've become addicted to this government spending. There's going to be a detox period. There will be a little disturbance, but we are okay with that. It won't be too bad." Guys, they're telling you. This is a thing that shocks me logging into Twitter. They're telling you exactly what they're doing. Exactly what they're doing. The market and the economy have become hooked and addicted to this government spending. We need a detox period. Trump and Bessent, they need to get this over with, basically. Because, guys, if it wasn't going to be now, they can continue to perpetuate it in stimulus with liquidity. But when are they going to get their cheaper rates? When are they going to fix the 10-year? When were they planning on refinancing all this debt they have this year? The best time to go through pain, if you're this administration, is right now. And I've been saying that there's way too much uncertainty, way too much debt to refinance, way too much beef between Trump and the Fed. We are living in fiscal dominance. You cannot, if you're the Federal Reserve, you cannot have your own opinion while the U.S. is $37 trillion in debt. Your opinion doesn't really matter anymore. Sorry, doesn't. These guys got $10 trillion to refinance. Sorry. So I'll say the same thing on this podcast as I have the last few weeks, guys. Short term is going to be volatile. It is. There's way too much uncertainty. No one knows. I mean, all these guys are running around touting tariffs everywhere. It's obvious. It's obvious what they're doing. They're literally going on television and telling you. The market and the economy have become hooked. We've become addicted to government spending. There's going to be a detox. There will be a little disturbance. We're okay with that. It won't be too bad. Now, once they get their cheap money, it's all aboard dollar debasement, weaker dollar, higher assets. But they have to lock in the cheaper money. They're not going to finance this entire administration with these rates this big. And you've literally got the former Fed of New York, the president of the Bank of New York, op-ed, Bloomberg, the Fed shouldn't enable Donald Trump. The central bank should refuse to play along with an economic disaster in the making. Okay. I mean, these guys, like, Bessent and these guys are going to, okay, fine. You don't want to give me the cheaper dollars that we need to fix this country? I'll force you. Pax Americana will collapse as you know it if you don't start cutting. It's really, really simple. It's really, really simple.
Jack Mallers makes the compelling claim that Bitcoin is the last real free market in the world, functioning apart from official declarations and media frenzy. Mallers contends that Bitcoin's price precisely reflects global fiat liquidity, contrary to popular belief that it responds to political developments or celebrity endorsements. The price of Bitcoin increases when there is a surplus of inexpensive money in the system. The price of Bitcoin decreases when liquidity becomes more scarce. Mallers cites Scott Bessent's remarks, emphasizing that a torturous detox time is unavoidable and that the American economy is dependent on government expenditure. He clarifies that in order to refinance the enormous amount of government debt, Donald Trump and policymakers would put pressure on the Federal Reserve to lower interest rates. Mallers claims that because of this fiscal domination, the Fed no longer acts freely and is instead guided by the financial requirements of the government. He boldly predicts that Bitcoin will react first and most forcefully when the Federal Reserve is compelled to loosen monetary policy and flood the system with cheap dollars. According to Mallers, Bitcoin gains when the current financial system deteriorates, because it is a put option on it. Bitcoin becomes a direct reaction to the volatility of the world economy when governments devalue their currencies through excessive spending and money printing. Mallers is essentially arguing that Bitcoin is a remedy for the system's shortcomings rather than merely a hedge against them. He boldly declares, "Show me the cheap dollars, and I'll show you a $500,000 Bitcoin if cheap money comes back." Remember to like this video, subscribe to the channel, and enable notifications if you thought his viewpoint was helpful so you don't miss any updates. We'd love to know what you think about the future of cryptocurrency markets, so please share your ideas in the comments section. We appreciate your time and hope to see you in the next video.